So markets reacting sort of as expected. Headline data was that inflation came in a little bit lighter than anticipated, a 0.3% month-over-month reading. When you take a look at this data in context with CPI and with the January data, what conclusion can you draw here? Does this seem to be confirmatory that January might have been a blip on the radar and February seems to have cooled back down?
As is usually the case with these things, the answer is probably somewhere in the middle.
Yeah.
We had a pretty strong reading in January, as you said, 0.5, and this one came out 0.3, and so that was actually weaker than people were expecting.
Right.
But when you kind of dig through the details, the issue really is that some of the stuff that drove this softer print in February, I think, is probably likely to go away in the next month or two. And we should probably get back to seeing somewhat stronger readings over the next month or two. So I really wouldn't want to take this softness today on board as, sort of a precursor to what we should expect to see. I think, if anything, we're going to see a bit of a bounce in the next month or two, especially on the core inflation readings. The headlines coming down, which is good news. I think that probably sticks with us. We've seen gasoline prices largely come off quite a lot.
Yep.
Certainly nothing like what we got last spring. So on the headline, it's going to help, but I think the core readings, which are more important for the Fed, that stuff is probably going to firm up in the next month or two.
So when we talk about whether it's PCE, whether it's CPI, I mean, generally about half of this is getting split up between food, energy, and housing. I mean, how are those three items looking to you in terms of where we go from here?
Yeah, energy is the most obvious place where there's been good news up until maybe the last few days, because gas is starting to creep up a little bit here like it normally does in the spring. But, we're way below the levels we saw last year. I mean, last year we were pushing, certain parts of the country, $6 a gallon, north of $5. We're nowhere near those levels now. And so the good news is that we have been coming down on gasoline prices. So energy, for the most part, and even natural gas, if you think about your heating bill, that skyrocketed over this past winter when that gas prices went up. And those bills have started to come down again because natural gas prices have come off. So energy, if anything, is a more encouraging story. Food prices, we've seen some softening, but still relatively high compared to last year, still in double-digit growth versus last year. But at least the monthly pace has kind of slowed down a little bit versus what we were seeing. Housing, I think there's still several months left until we see a lot of what we know is going on in the rental market in terms of, leases not growing as fast as they were, start to creep into the data. There's probably still, I would imagine, 3-4 months to go until that really starts to act as a little bit more of an anchor on the overall inflation reading, starts to kind of pull it lower.
Omair, I don't mean to diminish the importance of this type of data, but I do have to say that, in the context of the banking failures that we saw in March, I do openly wonder how stale this data is that we get, even the data that we get on the month of March, which will be measuring, if not during the banking crisis, before the banking crisis that we saw there. What do you suppose could be the impact to inflation? When will it start showing up, and where would we see it first if there were a genuine impact to inflation from, banks pulling back on lending, for example?
Yes, I think, the most obvious places you're going to want to look. I think the first signal really ought to probably be not really in inflation data, but more directly in the consumer spending numbers themselves.
Yeah.
And there we can at least sort of get, weekly data on how people are spending. In terms of the inflation numbers, it's going to be a few months, and I think the most obvious spot you would look at would be cars. When you talk about credit, banks failing, credit contraction, people getting fewer loans, normally you're taking out these loans to purchase big-ticket items, right? Yep. Cars are a pretty big one. There, I think when you talk about new car prices, used car prices, if that sort of source of funding dries up for consumers who are looking to buy cars, you'll see that in the sales data, and you'll see that in presumably pretty quickly in the inflation data as well, because manufacturers and dealers are going to counter that with more incentives. And so that's the first place I would really look. I think that's still going to take a couple of months because, unfortunately, one of the things we're going to see the next couple of months is that used car prices are going to go back up in April and May.
Is that where you're getting data from? Is it the Manheim Used Vehicle Index that you're drawing data from there to conclude on inflation?
Exactly. Yeah, Manheim's one of the sources. J.D. Power's another. Black Book's another. When you look at, they're all telling the same story, which is that what these guys are paying at auction to buy, to put on their lot to sell to you, they've been paying more over the last few months. Mm-hmm. They basically, long story short, they got caught short. Demand picked up because prices had come down about 10-12% for used cars. New cars didn't come down at all. So if you're looking to buy it came down several $1,000s for used cars. So it made more sense to go into that market. They didn't normally build their inventories like they usually do around the turn of the year. They got caught short. They're scrambling to buy more cars at auction. That's pushing those prices up. They're about to start passing that stuff on to you. And that's going to start to creep into the data probably, I think, next month in April and certainly in May. So it may be a couple of months where we really see it, but I think it's coming over the next few months.
Omair Shariff from Inflation Insights joining us today to talk about PCE and the overall environment when it comes to inflation here in the end of the first quarter of 2023. Omair, appreciate it and look forward to chatting with you again soon.